Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Control the controllables if you're worried about mortgage rates. Chances are you're hearing a lot about mortgage rates right now, and all you really want to hear is that they're coming back down. And if you've seen headlines about the early November Fed funds rate cut by the Federal Reserve, the Fed, maybe you got hopeful mortgage rates would start to decline right away. Although some media sources may lead you to believe that the Fed's actions determine mortgage rates, in reality, they do not. The truth is the Fed, the job market, inflation, geopolitical changes, and a whole list of other economic factors influence mortgage rates too. So while recent actions from the Fed set the stage for mortgage rates to come down over time, it's going to be a gradual and likely bumpy process. Here's the best advice anyone can give you right now. While you may be tempted to wait for rates to fall, it's hard to try and time the market. There's just too much that can have an impact. Instead, set yourself up for home buying success by focusing on the factors you can control. Here's what to prioritize if you're looking to put your best foot forward. Number one, your credit score. Credit scores can play a big role in your mortgage rate, and the difference of just a few points can make a significant impact on your monthly payment. As an article from Bankrate explains, quote, your credit score is one of the most important factors lenders consider when you apply for a mortgage, not just to qualify for the loan itself, but for the conditions. Typically, the higher your score, the lower your interest rates and better terms you'll qualify for. With rates where they are today, maintaining a good credit score is one of the keys to getting the best possible rate. To find out where your scores stand and what you can do to give it a boost, give me a call at 800-306-1990, 800-306-1990. We'll be able to take a look at some of that with you. And I think we've got a rsrlinks.com/FICO, rsrlinks.com/FICO, and you can actually go and get your scores. Now, you can go to annualcreditreport.com, and they'll give you your free credit report, but that doesn't have your scores on there. And you can go to a lot of other places and get credit scores or FICO 8 scores, which are not used for credits, for mortgages, or you can go to rsrlinks.com/FICO and get your true credit scores right there. Your loan type. There are many types of loans, and each one offers different terms for qualified buyers. The Consumer Financial Protection Bureau, CFPB, says, quote, there are several broad categories of mortgage loans, such as conventional, FHA, USDA, and VA loans. Lenders decide which products to offer, and loan types have different eligibility requirements. Rates can be significantly different depending on what loan type you choose. Talking to multiple lenders can help you better understand all of the options available to you, unquote. Now, that is good advice if you're thinking about going to a bank on the corner, because they only know one loan, theirs. When you call a mortgage banker like we are at Geneva Financial, we're shopping all sorts of investors all the time, so we can be your personal shopper. Work with your team with real estate professionals to see which loan types you may qualify for and figure out what will work best for you financially. Your loan term. Just like with loan types, you have options. When it comes to terms or length of your loan, as Freddie Mac says, quote, when choosing the right home loan for you, it's important to consider the loan term, which is the length of time it will take you to repay your loan before you fully own your home. Your loan term will affect your interest rate, monthly payment, and the total amount of interest you will pay over the life of the loan, unquote. Bottom line, lenders typically offer mortgages 15, 20, 30-year terms, and which term you go with has a direct impact on your rate. That's why as a certified liability advisor, we're always looking at safety, liquidity, and return. We want to know what is the right time. How long are you planning on being in the house? What type of loan is it? How do you want to repay it? A lot of issues there. Bottom line, remember, you can't control what happens in the broader economy or when mortgage rates will come down, but there are actions you can take that can help you set yourself up for success. Give me a call again, 800-306-1990, 800-306-1990. Let's chat about what makes sense for you. That's the Mortgage Minute, brought to you by our friends. I'm sorry, the Real-Time Real Estate segment, brought to you by rsrmoney.com, rsrmoney.com.